All right, what's up, guys? Happy 2026. We're in mid-January, and I thought it was time for us to come on here and
Yeah.
give some insight as to what's going on in the market and specifically towards buyers,
Yeah.
right? We work with a lot of buyers, and during the holidays, you always get that like, hey, I want to wait till after the holidays, and people are thinking like, hey, how do I get the best deal and all that stuff. So today we're going to focus on really how to compete in today's market as a buyer
Yeah.
without necessarily overpaying, right?
I like
But I
that.
think that's what a lot of people want to do, right? They want to get the best deal. They want to make sure they're not overpaying. And there's a strategy behind it.
Yeah, and I think, we also have to understand, the area that we're in, right? We're in the Silicon Valley where, it is competitive. It is competitive, but nobody wants to ever overpay, right? So I think it's also understanding, like not overpaying, but maybe you're not getting a deal, but you're getting, you're paying the comfortable price, the right price,
Yeah.
right? That makes sense for you.
Absolutely, absolutely. So the first point I want to touch on is really that winning in today's market, right? Like to get your offer selected doesn't necessarily mean you're the one who paid the most.
No.
And we've seen many examples of it, right?
Yeah.
And so I like to just point out that it's not just about the price at the end of the day. It's also how your offer is structured,
Absolutely.
right? And maybe you can elaborate on maybe what sellers really want to see or what they really care about.
I think the biggest thing is, there's everybody, everyone assumes that the seller wants the highest price, right? That's the assumption, which again, that is true in certain cases. But I think it's important to find out, what else besides the highest price the seller wants, right? And there's a few different ways of doing that. One is obviously your buyer's agent, your agent can reach out to the listing agent and ask those questions to that listing agent. Hey, obviously you guys want top dollar, but is there anything else that your seller is looking for?
Yeah.
So that you as an agent, you could structure that accordingly, and you can stand out above other offers.
Yeah.
The other thing that I recommend doing is when you have your buyer's agent reach out. The second is having your loan officer also reach out to that listing agent, right? So then now what happens is then as an agent you can reach out to the mortgage broker, the loan officer. You guys can have a huddle with the buyer and say, hey, this is the information we found out. Look at the comparable. Let's see how we're going to structure this off.
Yeah, absolutely. And like you said, it's not just about price, right? Like price, obviously, if you're way off in price, that could make a difference. But I think the other things that are important to look at is if you're a seller, put yourself in the seller's shoes, they may be buying another property, right? So, or they may need those funds for something else, or there may be a certain timeline or a deadline. So I think those things also come into play, right? Like they want to be certain that if you're the offer, you're going to close, right? You're going to close the deal. Maybe the time frames that you're giving them, the close of escrow, whether they need more time or less time. So it's not just the price, right? It's those other terms that also are going to play an important role, whether they choose your offer.
Absolutely. And the only way you know that as an agent, you got to pick up the phone and you got to reach out to that listing agent, right? You got to be that loan out. You got to reach out, and then you can kind of unpack and see what those are. Like you said, if they need those funds to close on another escrow, if there's a certain timeline they need, now you can address that accordingly with the buyer, and then you can present your offer.
Yep, 100%. Okay, so I wrote down preparation, right? How do you prepare to go in and have the strongest offer, right? You're in the mortgage industry, right? A lot of experience. What are some of the key tips to get prepared from a financial standpoint?
So the first thing that I like to do is really sit with the buyer and understand, their budget, right? There's a few different things. There's one of actually what they qualify for, right? And sometimes people qualify for more than what they're comfortable with.
Yep.
So there's a few questions I typically ask buyers. I say, hey, listen, what are you comfortable allocating towards your down payment and closing costs? Let me know that number. What are you comfortable paying per month towards the mortgage, right? Then once I understand that, as a loan officer, I can solve for X. X will be the purchase price. Okay. Now remember, that's what they're comfortable with. Now I share that with the buyer's agent and the buyer. Now they know not to exceed a certain number based on their comfort level.
Yeah.
Okay, that's one thing. And then obviously, we can look at their finances and see where we can stretch that. But I think it's for a buyer to get really clear on what they're comfortable with in regards to down payment and monthly payment. The other part is making sure before you're looking at property or, maybe in the early stages, making sure you get pre-approved or get the file underwritten.
Yeah.
Right? So that when you do get to that point to write that offer, you can be confident that you can go ahead and go with maybe no loan contingency.
Yeah.
So it makes your offer look a little stronger. But again, I think that's a good strategy call to have with the buyer and the buyer's agent.
Yeah,
Right.
absolutely. And I've been on the listing side a lot of times where I'm representing the seller and I'm looking at these offers that are coming in. And the ones that stand out to us the most are the ones that have the very cleanest terms. Sometimes I obviously we look at the price, but then if there's another one that's maybe a little bit lower in price but has way better terms, they're fully underwritten, there's no contingencies or minimal contingencies, right? Then to me, I'm like, hey, this is something we got to consider, right?
Absolutely.
Because there's less chance of that deal falling through. So I think you're right, and just making sure that you know your numbers, right? As the buyer, you know what you're comfortable with, your comfort zone. And then if you can get fully underwritten versus just a pre-approval, I think that goes a lot further.
Absolutely, absolutely, and I think it's I've seen you do it before. I mean, it's basically if you put your shoes as a listing agent, you receive these offers and you pretty much put them in two stacks, right? The stronger ones versus the weaker ones, and obviously you're going to present these to the seller, but you already have an idea by looking at that offer if it's stronger or weaker, even if it's not only if it's based on price.
Yeah, right? Absolutely. The other thing too that is important is making sure you understand the comps and what's happening. I think that's an important part of preparing to write the offer. You don't just want to, like, if you're a buyer, you don't just want to throw a random number, right?
No.
Like, hey, I think I should offer this just because I feel it's worth that, right? You need to understand the market. And so a good agent is going to run through the comps with you. They're going to look at the data. They're going to look at the trends. They're probably going to call some of the other agents that have sold properties or pending properties. And you're going to have some insight as to where do I need to position my offer so that I have the best chance of competing.
Yeah.
Going in blind, I think, is a huge mistake.
Yeah, no, absolutely. And a lot of times, buyers, they think it's going to be based off of, the list price.
Yeah.
Right. And we see sometimes it's a marketing strategy where an agent will list it a little below market.
Yep.
So they get a lot of eyeballs and, they get allowed to bring that price back up with just the competition, right? A bidding war. But I think like you said, it's important to understand that the list price is not what you have to offer. You have to do your homework as an agent. And I think the big thing is not just do the homework, but be able to present it to the buyer so they understand why they need to be in this price point, or why they need to write at this number, right? And I think that's a big challenge because you as an agent need to lead the buyer, right? And give them that data so that they can make that informed decision.
Yeah, absolutely. So what are some ways to strengthen your offer without necessarily adding to the price?
Yeah.
Right? I think we want to talk about that. One thing is that I see is just the deposit, right? In our area, it's standard that people put a 3% deposit. I don't know who made that up or why that's become the standard. Yeah. But if everyone else is doing a 3% deposit,
how are you separating yourself?
Yeah, how are you separating yourself, right? If you did a 5% deposit, right? Or what if you even did a portion of your deposit that was non-refundable?
Yeah.
Right? Even if your price is lower, but you're like, hey, I'm willing to give up $5,000 is non-refundable once we get in contract. Those are little separators that you can do where you're not touching the price, you're just touching the deposit.
Yeah, right? I like that. And I think it's, it's case by case per property, right? And I think people have to understand it's not standard. Like every single property, we're going to approach it this way. Mm-hmm. I think there's some basic techniques, but once you have that information, you got to be able to strategize on that particular property, right? A lot of times, even our area, a lot of people go non-contingent, right? Meaning that there's no contingencies. But again, if a certain property, if there's no inspections, then we're not going to advise our client to go non-contingent.
Yeah.
But if we sit with our client, we review disclosures, review inspections, and we're saying, hey, it's pretty clean, we may want to opt out of having any contingencies in regards to inspection. That, again, can separate you, right? The loan contingency, if you're fully underwritten, like we mentioned, if your loan officer is comfortable with you removing that contingency, that also straightens your offer. And then you start compounding it with, hey, we're going to go in and release some of our non-deposit, like you said, 5,000, you're going to be able to receive immediately. And then you go ahead and remove all these contingencies. Those little things start compounding where now your offer looks stronger. Yeah,
now it's not just the price. You have all these other terms that are stacking in your favor. I think the closing date also is important.
Yeah.
In the past, it'd be like, hey, 30 days is a standard closing date, right? But if you can close sooner and that helps the seller, why not close sooner? Or if you can push the closing out because that helps the seller as well, why not close, in 45 days, right?
Yeah.
So you're only going to know that if your agent is doing a good job of communicating,
Yeah.
with the other agent. But these are all these little things that start to stack in your favor, is being flexible with the closing date, being flexible with contingencies, or trying to tighten them up if it makes sense
Yeah.
for your situation, right? Or doing more of that legwork up front so that you can tighten them up. What popped in my head is, if you're questioning the condition of the property, what if you had a contractor that could walk the property with you before you submit your offer? So now you can feel comfortable in removing your inspection contingency, right?
Definitely.
And now you can come in without that one, right? So there's all these little things you can do to tighten up the terms and make your offer more favorable. Right?
Absolutely.
You talked about communication earlier, right?
Yeah.
What are some of the things that you think are important when a buyer agent is communicating with the listing? How much of a role does that play?
The difficult part that I hear with some of my buyer's agents is, is that sometimes the listing agent won't get back to them, right? So if you're a listing agent out there, again, I think it's important for you to have that dialogue, and you're only benefiting your seller.
Yeah.
Right. So the first thing is, you as a buyer's agent, you have to make multiple or an attempt to reach out to that listing agent and start asking them questions.
Yeah.
Right. Again, a simple question is going to be, obviously, if you guys want top dollar, but is there anything else that the seller's looking for? What can we do to go and structure our offer so that it's attractive to your seller?
Yeah.
Do they need a rent back? Do they need an extended close of escrow? Do they need a shorter close of escrow?
Yeah.
Right. What is it going to take for us to kind of separate ourselves? And you'll be surprised. It sounds simple, but a lot of agents are not willing to pick up the phone and call that listing agent.
Yeah.
Right. And I think you've been on the listing side. If a buyer's agent's calling you, then you're more motivated to work with them because they're motivated to go ahead and get in contract, and more than likely motivated to close.
Yeah.
Right.
What's funny is I've done a lot of listings. I've had listings where the agent never contacted me at all and just sent an offer.
Yeah.
And I'm like, how are you doing justice for your client, right?
Yeah.
And we're talking $1 million, $2 million properties where they'll just send an offer to my email. They've never called me. They've never texted me, never anything, right? Or their email will be like, hey, we showed your property. Here's our offer. Let me know. And I'm like, that's how you're going to vouch for your client? That's how you're advocating to get them, into a winning position? And so I think, unfortunately, this is something that a buyer doesn't really know if their agent's doing it, right? You don't know how well of a communicator your agent is, but that's crucial. I've won many, many deals for my buyers because I've just built a good relationship with the agent, calling them, congratulating them on the listing, building that rapport, small talk, trying to find that common ground, or, hey, we might be friends on Facebook, stuff like that.
Or know someone.
Or, hey,
Yeah.
you know so-and-so from your office. And
Yeah.
the next thing you know, their guard's down, and now the listing agent is revealing, hey, you know what? You're super cool. Can you come in at this price, or do this or do that, and we can make the deal work?
And those are inches, right? We talk about this all the time. They're small little inches to get these offers accepted, right?
Yeah.
And I think by you communicating with the listing agent, and then on top of that, you also have your loan officer communicate with the listing agent, right? Have the loan officer reach out and say, hey, listen, my clients, they have this type of credit, this type of income, this type, just give them kind of just an idea that you have a strong buyer, right? I think is important, because then again, that listing agent can relay that back to the seller, right? And I think that's important too. Sometimes as a buyer's agent, you may need to help out that listing agent and say, hey, you may want to communicate this certain information to your seller, that this is the type of buyer we have. This is why they're motivated. This is their credit. And I think those things, again, they're small things, but remember, if you do all these things, they start compounding, and that makes a difference.
That makes a difference. Absolutely. Okay, a couple more things. When do you push and when do you walk away? All right? Because sometimes you get in that situation where you're competing with other offers, your agent's telling you got to come up or you got to do this. And as a buyer, you're probably like, I know what a buyer goes through, right? Like, I don't want to feel like I'm paying more.
Yeah.
Or I don't want to push out of my comfort zone. And so what's your advice maybe on when do they push? When do they walk away?
I think it's definitely case by case, right? I think, from the finance side, I'm looking at, one is, are they comfortable with the monthly payment, right? And then are they comfortable with also walking away? Hey, are
Yeah.
you comfortable losing this house over $50,000? And as a loan officer, then I can calculate also, hey, if we went from 1.2 million to 1.25, this would be the payment difference.
Yeah.
Are you okay with walking away with that payment difference, based on that payment difference, or do you want to continue to compete?
Yeah.
Right. So I think it really boils down to the buyer. What are they comfortable with?
Yeah.
Right. And you're going to get different comfort zones. And again, I think as an agent, you just got to lay out, the options and show them what the difference is, right? If you had to go up in price, this is what the difference would be in your down payment. This would be your difference in your monthly
Your
payment.
monthly payment. Yeah.
Right? And then they decide, right?
Yeah. The other thing is the contingencies, right? Sometimes just because you can waive the contingencies doesn't necessarily mean you should.
No.
Right? It really depends, right? Like if I'm representing a buyer and I call on a property and they have no offers, why am I going to come in non-contingent just for the hell of it?
Oh yeah,
Right?
yeah, no.
And because for a point in time when the market was like really, really crazy, like almost all the offers were non-contingent. But as the market has started to shift and certain homes are, have more offers than others, I think the agent has to change their approach as well, right? Because you're essentially putting your client at more risk
For no reason.
For no reason,
Yeah.
right? And so that doesn't mean you waive the contingencies completely. Maybe you shorten them to still make it attractive, but you also want to put those protections in place for your buyer.
Absolutely. And again, the way, we kind of teach or preach to our agents is it's case by case, but that's why it's important to have an offer consultation with that buyer, right? And you're going over disclosures, inspections, going over the conversation you might have had with the listing agent, bringing your loan officer in that offer consultation so that we know, hey, listen, if I did have to go up 50,000, this would be the payment difference, right? So you kind of unpack that during offer consultation and you really spend some time with that. And then when you write that offer, everyone is on the same page. The buyer, the buyer's agent, and the loan officer.
Yeah.
Right.
And it's important that you have a good loan officer that's upfront and honest on what their abilities are or how comfortable they feel with your file, right? Especially maybe if you have more of a complicated file, or maybe you're self-employed and the lender might ask for other documentation.
Absolutely.
And those are things that the lender is going to have to chime in on to decide how aggressive we want to be with the contingencies for the finance or for appraisal, all those different things. So I think setting the right expectations, right, or getting the right expectations from your agent and from the lender is important so that you can decide what risk level you want to take with your offer.
Yeah, no, I agree.
Okay, in closing, any examples or recent examples of where you've seen some of this stuff play out where the buyer won, they weren't necessarily the higher price, or we were able to help them get a lower price, stuff like that?
Yeah, I mean, I've seen it a few places where it wasn't the highest price, but it's within maybe $10,000. Not a huge difference, but I think the way we were able to win is because we were able to shorten our close of escrow, right? Instead of being a 25-day close of escrow, we were able to close in 17, right? And so I think again, just really understanding that is that important to the seller, and then you can go ahead and talk with your loan officer and say, hey, listen, is it possible to close in 20 days or 15 days?
Yeah.
Right? So I think that's important. The other thing I've seen is on the buyer side, on getting them to come up in price, right? A lot of times people think 50,000 or whatever that number is big, which it is, but how much does it really impact your down payment and your actual monthly payment? And I've had to have that question or had to have that conversation with a few buyers when they're like, no, we don't really want to go up. Okay, well, let me at least just show you your numbers, and then you can decide whether you want to go ahead and increase your offer, right?
Yeah.
So those are two examples that I've seen recently. But
I see one with, sorry to interrupt, with
Yeah.
actually John on our team,
Yeah.
right, who recently got his client a $45,000 discount
Yeah.
on the property, right? So by him having an appraisal contingency, the appraisal came back short, right? The property had been on the market for a while.
There you go.
So he came in probably at a higher price, locked it in, got them offer accepted, had the appraisal contingency. Now it came in short, and now he was able to go back and negotiate and ends up getting a $45,000 discount for his buyer.
Awesome.
Right? Because the seller really needed to sell at that point, right?
Yeah, because it's been on the market for a while, right? And so, no, definitely.
Yeah, so remember, like, if he would have advised them to not have an appraisal contingency, then that wouldn't have worked out
Yeah.
because they would have been, locked
They would have
into
been, they
that
would have been
price.
committed to that price.
Committed to that price,
Yeah.
right? So by strategically having a appraisal contingency for that particular property,
Yes.
it worked out in their favor.
And especially again, that property's been on the market for a while.
Yeah.
Right. So it allowed him to go ahead and do it case by case and saying, hey, this one we can go ahead and add our appraisal contingency, and it's not going to deter them from accepting our offer. Right.
And I know with also like a lot of, we've been getting creative with the financing with the buy downs,
Yeah.
right? And so there's a lot of situations where we've been able to structure our offer so that the seller gives us a credit back towards the buyer's closing costs, and then that is used for a buy down on their interest rate and mortgage
Yeah,
payment.
to get the rates, we're getting rates in the threes.
Yeah.
Right, 3.5% on a buy down, and it's not costing the buyer. It's a credit from the seller.
Yeah.
Right. So that's definitely a great opportunity to be able to get the seller to give you a credit for closing costs.
Yeah, so there's a lot of different ways, a lot of success stories we've had. Just those are a few there. But I think the final takeaway is, just to remind buyers that are watching this that you don't need to overpay necessarily to win.
No.
There may be some situations where like that neighborhood, that particular property, they got 20 offers. You're probably going to pay, a premium because of that neighborhood. But when it comes down to like offer against offer, sometimes it's the terms, sometimes it's those other factors that get you to win, even if you're not necessarily the highest offer.
Yeah.
Right. And so, besides what you're seeing on the headlines and stuff, right? What you see on the headlines is always, it's not necessarily true.
Yeah.
You got to look at case by case, offer by offer.
And that's the biggest thing that I preach is that look at it by case by case. Like, again, it's so competitive in our area, but there may be a certain property that's been on the market that you may be able to leverage some more negotiation, right?
Yeah.
So it's always case by case. And it's, again, I really pushed for you to have an offer consultation with your buyer or with your buyer's agent.
Yeah, absolutely. All right, guys, there you have it. Hopefully, if you're a buyer, hopefully some of this information helps you as you're planning and moving forward. If you need anything from us, if you'd like to schedule a free consultation, feel free to reach out to us, and we're happy to chat with you and give you some direction on the best strategy for your scenario.
Absolutely.
And maybe the particular neighborhood that you're shopping in or the particular property. Yeah. All right, guys, see you next time.